What's going on, everybody? This is Jacob Shoup. You're watching the Tom O'Brien Show. We're going to pick up the steam for the end of the day here. I hope you all have been having a fantastic week. Obviously, a little bit of a turnaround right now. This Friday, we are going to have live trading with Larry Pesavento. Again, you go to TFNN.com, go to the news, go to the services tab. And you see it right there, live trading Fridays with Larry Pesavento. He does this 2 times a month. It is from 9 to noon Eastern time. Let's say you're not in it right now, you want to subscribe. Well, you get to go to that one, and then you get to go to the first one in April as well. I can't believe it is almost April. That is terrifying. You can also check it out on the front page right there. While you're at it, check out the Tiger's Den Trading Room, $1 a year. We do that just so we can keep everyone safe and we know who is in there. Let's take a look at what we got going on. Well, your SPY is off 1.39% at 567.51. You have the composite off about 2.33%. Dow Jones Industrial off about 0.58%. Russell Futures off about 1.38. The dollar is ticking a little bit higher. You have rates going back up, okay? 10-year trading off about 0.16%. What's the news, right? I mean, essentially, Trump is going to add tariffs on auto imports. Oh, man. That's soon to be at 4 o'clock, so we'll see what comes with that. You have a big paper coming out speaking about the potential for a massive amount of overspending on data centers. Of course, you had Alibaba's CEO say yesterday that he didn't understand why Americans are spending so much on it. We kind of went into that a little bit during the whole DeepSeek fiasco and why, you can't run the newest stuff or push cutting edge with things like DeepSeek, but we also don't need to be spending as much as we are running older models or current models. And again, with the Alibaba CEO, who knows what his personal interests are or reasons for saying that kind of stuff. So, you take all these things with a grain of salt. We have Apple off 1.11%, Bank of America off 1.13%, Citibank, let's see what else we got. Google off nearly 3%. You're just off. I think data center stocks getting hit the hardest. I'm glad I took a little bit off Nebius here. You're off 10.56% today, so at 24.30. That is right along this kind of line of resistance here, and it is cracking down. So hopefully we can get a close above that. If not, there's still probably some movement to go down. Of course, they are burning a lot of cash, but they're not leveraged, which is great. So they have room to do that if they need to. They can either take on debt or they can just, kind of dilute the stock. Kind of wait to see what happens with that. They are the only only company out in Europe doing it at this scale. Of course, they're expanding into the U.S. as well. But with this kind of news coming out, it puts a lot of this stuff in risk. And again, I find it interesting, with this kind of paper coming out, I find it hard to believe that companies like Meta and like Microsoft would be kind of out of the loop on that. Of course, they know what DeepSeek did. They know what diluted models are. They know what DeepSeek used. And what that paper really was about the inability, kind of like diminishing returns, I guess, with the performance of AI related to, an increase in data center capacity, right? And so I think again, I'm sure these, what we're calling hyperscalers are aware of that kind of stuff. And, I think what they're trying to kind of get into is one, it's like, we don't create this processing power necessarily to make the AI better, but to kind of service the demand we're expecting with it. So, is this an overreaction? I think it's still a little bit too early to see. Of course, you're going to continue to get gains in efficiency in AI, but it seems like, and again, I think this market does have somewhat of a fear of illiquidity, which is why I was a little bit, on top of other things, definitely business specific, a little bit sensitive with Tesla, especially running up as much as it is. It seems like, inflation is not going to come down to 2% until 2027. So you're going to get these relatively elevated interest rates, or at least Fed fund rates. You have Besant coming out and trying to suggest different ways you can make buying the 10-year more appealing for larger banks and entities. And, we'll talk about all of this. Long story short, I still think there's a lot of uncertainty, and the market is, of course, extremely sensitive to any kind of new development that has to do with tariffs, that has to do that questions the amount of money that we've been spending over the past year and a half. And Nebius off 10.56%. Little bit fortunate that I took some off yesterday. I'm still in the position with a decent amount of shares. I'm right, around where I purchased at, so not really off too much in any capacity. But this is one I think we're going to have to keep track of. Especially if you get downgrades in CoreWeave, that's a massive problem. Again, I think in a way their exposure in Europe, which was kind of seen as maybe not as attractive because all the energy was in the U.S., it might end up being something that can help float this equity. So we'll see what happens. Of course, cash burn business, but they have a lot of room to leverage if they need to, or dilute. Let's take a look what else we got going on. Palantir off 5.82%, trading at 90. And the SPX, of course, we went over that. So, okay. Let's talk a little bit, of course, with the auto tariffs coming out. It's going to be at 4 p.m. Trump on Monday, it hinted at the auto tariffs could arrive prior to April 2nd. Said we'll be announcing that fairly soon over the next few days. Probably then April 2nd comes. That'll be reciprocal tariffs. He's calling it Liberation Day. But here's the thing. He said, maybe we'll push it out. It's just the problem is that uncertainty exists. And I think this is a big overreaction because what we've seen with gold is it's almost like that is being used as kind of like a hedge for the uncertainty, right? Not necessarily a hedge for inflation because we haven't seen that, at least, you hadn't, because equities have been moving up so greatly, comparatively speaking. But when the uncertainty strikes the market with the tariffs and Trump starts talking, you really did see a nice march up in gold. And that's kind of like the general operating thesis we've been looking at. Even that's off today, which this might be somewhat of a market overreaction to some of this news. Folks, stay right there. We'll be right back.